guests today on the show. We have Manas Jaiswal and Siddharth Sedani on the fundamentals. And Manas, let's get in a take from you. So much going on across the globe, etc. With crude oil prices, it seems like the earnings season seems to have kicked off on a fairly decent note, although it's early days. What exactly do you make of the index perched at the 11,000 mark?
Yeah, I believe that in a day or two, Nifty can break its all-time high of 11,171 because I think just 2 days back, Nifty has given a triangular breakout. And looking at the pattern today, I think in a day or two, Nifty can cross that resistance and it can go and test 11,350, which is the target of triangular breakout what we have seen 2 days back. So I think if you're a trader and if you can keep the stop loss, and definitely even at current levels, you can take a chance. You can take a long trade here, keep the stop loss below 10,950, and your target would be in the range of 11,300 to 11,350 in next say around 1 week time.
All right, there you have it. That's the view coming in on the Nifty. Yes, fifth straight day of a rally coming by for the benchmark. But let's also bring on board Siddharth Sedani's view then. And Siddharth, it looks like most of this rally that you are witnessing today in trade has been spurred by the downtick we witnessed in crude prices.
Good morning. Yes, of course, one of the reason is, of course, downtick in the crude oil prices, which is broad-based and which is benefiting to many companies. Along with that, of course, the result season is giving a tailwind to the markets with the biggies of the world, likes of TCS, which has posted good set of numbers. So, result is definitely giving directions as we anticipated before. And this month overall in terms of markets, I think it will be completely on the result basis, and the merits will be given to the companies which will be posting good set of or inline set of numbers.
Okay, that's the outlook coming in on the fundamentals as well as the overall earnings. Manas, in the meantime, let's find out what exactly are the top trades based on the chart patterns. Which are the stocks that you are looking at closely?
The first one is a buy on India Cement because we have already seen a big crack from the level of 220 to almost 100 rupees in India Cement. But now there are some sign of reversal because the stock is trying to make a higher top and higher bottoms on the daily chart. And looking at the charts today, I think the possibility is very high that the stock can recover from current levels and it can test its 50-day moving average, which is placed near to 120. So take a long position here and keep your stop loss below 110. Second is a buy on DCB Bank, where after a very long time we have seen a breakout above 200-day moving average. It was facing resistance near to 200-day moving average for last I think 2 months time. But since stock has broken that resistance, the possibility is very high that it can come in the range of 200 or 205. So for next 2 to 3 trading sessions, my target would be in the range of 190, 195, and the stop loss should be 180. And last one is a buy call on MRF because most of the tire stocks are showing some strength, and I think the strongest one is MRF. And we have seen some sideways move recently, but now it has given a clear breakout on the daily chart. So after this breakout, I think it can test its previous high of 80,000. So take a long position here and keep your stop loss below 76,500.
All right, well, there you have it. Those are top picks coming in from Manas. It's an all buy list: India Cements, DCB, as well as MRF. But without any further ado, let's bring on board all of your viewer queries, which you all have been sending in thick and fast. First up, we have a live caller joining us from Kolkata. His name is Shubho Roy. Shubho, hi, good morning. Thanks for joining in. What's your question?
Hi, ma'am. Good morning. Ma'am, I'm holding Jamna Auto 2000 quantity with an average price of 92.37.
Okay.
I kept on buying this stock from 68 rupees per month, 100-200 quantity. Now it becomes 2000. So for the last 1 year, I kept on buying. So my investment horizon is 2 to 3 years. So should I kept on buying for the 2-3 years, or should I just hold?
Okay, so you have steadily accumulated Jamna Auto over the year, which has caused your quantum to jump up to a good 2,000 shares. So it's quite a big investment made in Jamna Auto. But do remember, there's this entire shift in CV demand towards high tonnage vehicles. That is something that Jamna Auto has already benefited from, you know, if you look at the Q4 numbers. And it's expected to continue benefiting going forward as well. And of course, we know what's been happening to CV demand, the entire CV cycle, as is also evidenced by the monthly sale numbers, the monthly auto sale numbers has also been increasing. So in light of all of this, Mr. Sedani, what's your view on Jamna Auto? Should he continue consolidating his position in the stock or hold on, or what exactly should he do?
Well, Mobina, Jamna Auto seems to be a very good stock in the auto ancillary pack, and he should consolidate the quantity which he is currently holding. Basically, in the parabolic spring side, it's been doing good in the replacement market as well as the OEM. Both the sides, the company has been doing good. In fact, in the spring side, they have a market share of above 70%. So it's a good stock to hold. In fact, our target is 102, which is not that far off from the current price, but I would say I would still recommend a hold on the stock and keep reviewing on every quarter.
Okay, that's the take coming in based on the overall fundamentals, and clearly it's a thumbs up coming in for a Jamna Auto. In fact, let's also understand what the technical take is, but let's actually get in a view then on Jamna Auto. Manas, what exactly is your view based on the charts?
See, in last 18 months, we have seen a big rally in Jamna Auto from the level of 30 rupees to almost 102 rupees, which stock has made, I think, last month. And for last, I think, 3-4 weeks time, stock is correcting. It is trading in a falling channel, but today it has given a breakout above the upper band of the channel. So the overall outlook is definitely positive because on the medium term chart, stock is still making higher tops and higher bottoms, and now the possibility is very high that it can cross its previous high of 102 and it can test 117 to 120 in next 2 to 3 months time. So definitely this is a very very good stock. I think one can hold it, keep the stick stop loss below its 200-day moving average, which is placed near to 78 rupees, and till stocks trading above 200-day moving average, I think any correction would be a great buying opportunity in Jamna Auto.
That's the take. Clearly a big thumbs up coming in based on the fundamentals as well as on the technicals. You can look to definitely stay invested, hold on to the stock, even buy on dips or buy on any sort of correction. Manas has a stop loss of 78, and you heard Siddharth give out his fundamental take saying that you can hold on with the target price at 102. 91, that is where it's currently at. Well, we've got another query then, and this one is coming in from Neeraj Kapoor. He's calling in from Kolkata. He's bought some shares of Dabur. Let's find out more. Welcome to the show, Neeraj, and tell us, what's your question?
Hello, madam. Good morning.
Good morning.
I'm holding 5,100 shares. Bought in at IPO in the year 1994.
All right.
So, yeah. So
what
is
would be the
target
approximate price in 94?
like? I bought it at 45, madam. IPO.
Okay.
1994, madam.
All right. So
So
now you're
what is
looking to stay invested?
Yeah, of course.
Okay.
So
All
what is
right.
the target like after 5 years?
Okay.
And what should be my stop loss?
All right. We'll help you out with that question. In fact, remember, Dabur has been one of the FMCG stocks that has really given a smart return. In fact, for our investor here, by the way, I just want to say kudos to you, Neeraj, because you've really, waited it out. You've been patient in this investment, and it's reaped you smart returns. So let's understand what the outlook is now for the next 5 years, or what targets and stop losses you should look at. In fact, Siddharth, you have the management of Dabur quite candidly saying that the entry of Patanjali into the space has been a blessing in disguise, and that they will be able to, deal with the competition. They are fairly confident of growth targets. Let's understand how you're looking at this company from an earnings perspective. Do you believe that the valuations are compelling and that this sector as a whole holds promise? Do you think that Neeraj should continue to stay invested? What's your take?
Yes, Neeraj should continue with this investment, and it's an old investment, so he happens to be a veteran investor in Dabur. So of course one should keep holding. Ayurvedic portfolio and product mix has been really doing good, and of course Patanjali has helped them to increase their market share and increase the reach of Ayurvedic products. The company has been posting good volumes over the last few quarters now, and this quarter is also expected to post a good set of numbers, although we have a target price which is very near to the current price, that is 410, but still I would suggest the investor to keep holding the stock.
Okay, keep holding the stock, and of course, I'm sure even our investors' buy price, the IPO price, you'd have to consider all the adjustments that must have been made in Dabur, for bonus, stock splits, so on and so forth. But yeah, he's been patiently holding on to Dabur, Manas, since 1994. So I guess a chart view may be a little moot for him since he's such a long-term investor. But still, for the benefit of our other viewers, and of course to provide an option as well on how exactly is this stock looking at on the chart. So it could provide, if our viewer does want the best possible exit option. What's your strategy on the charts?
See, we have seen a big rally in Dabur recently, and I think in the month of January or Feb, we saw some correction, but that time the stock took support near to 200-day moving average, and I think 2 months back it gave a breakout again above 360. And still, I think stock is strong, in a strong uptrend, and the possibility is very high that if you're talking about next 8 to 10 months time, then stock can come in the range of 425 to 450. So any correction would be a great buying opportunity in Dabur. I think if he is long, then definitely he can own it, and especially till stock is trading above 200-day moving average. I think definitely he can hold the stock. He can keep the stock in his portfolio and keep the stop loss just below its 200-day moving average, which is trading near to 350. And target would be in the range of 425 to 450 in next 6 to 8 months time.
Okay, there you have it. That's a view coming in on Dabur. Once again, Mr. Kapoor, thanks so much for calling in and sending in your question and query on Dabur. Prospects, of course, according to both of our experts, do look interesting. Let's move on and bring on board our next query. It's coming in via email from Banumati, and she is from Chennai. Our viewer says that they've bought 25 shares of Dalmia Bharat, bought at 3,015 rupees per share, and they want to know what must they do now. They want a view rather for the short as well as the long-term time horizon. Now, we do know that Dalmia Bharat as well wanted to get very active when it comes to the entire M&A space in the cement sector, using the IBC rules to try and get the best. Of course, it did come into severe competition with Ultratech Cement, but nevertheless there was a lot of frustration in the entire case that took place, and that is something that led to some bit of volatility in the stock price of Dalmia Bharat. At this point of time, it still looks like there's no clear decision made, but yeah, on this impending event, Mr. Sedani, what would your strategy be, because our viewer is sitting on a loss?
You're correct, Mobina, that the overhang on Dalmia Bharat on the NCLT case of Binani Cement, where Ultratech is the highest bidder, I think there the company has got an overhang. The stock price is seeing some kind of a consolidation or a bit of a correction, and that is why the investor is losing money. But overall perspective, it's a good cement company. Monsoons going on currently has been a seasonally weak quarter for cement space. Overall, yes, the company has been leader in the south and northeastern part of the business, and we can expect a strong traction in the month of quarter of December, where the cement companies has been seeing a strong seasonal quarter. So Dalmia Bharat is a good company, a leader in the space. Keep holding it for maybe 6 to 12 months. The target should be around 3,400.
A good stock to hold on to in the cement space. For the long haul, it would definitely be a keeper. But Manas, let's just talk about the near-term chart movements. And how have you read into Dalmia Bharat as a cement stock? Do you believe that at 2350 it merits a hold or not?
See, technically speaking, I am not very much bullish on most of the cement counters, and because we have already seen a correction of around 25 to 30% in most of the cement counters. And especially Dalmia Bharat, where stock is making lower tops and lower bottoms, I think there is no point to take a long position here at current levels or hold the stock. I think it is better idea to exit from the long position on any rally near to 2500, 2550, and invest this money in Ultratech Cement, because see, this is the only stock which is trading above 200-day moving average in entire cement counters. And looking at the charts, I believe that in the coming days, the stock can even break 4,500, and it can come in the range of 5,000 to 5,200. So here you can see almost 20 to 25% returns in next 12 to 15 months time. So I think it is better idea to switch from Dalmia Bharat to Ultratech Cement.
A switch to Ultratech Cement, that's the outlook coming in. But do remember to take a call as to how you want to really approach this. Siddharth has spoken about the fundamental prospects being intact. but you also have another option of Ultratech cement, because remember, Mana said by and large when it comes to mid-cap cement counters, he's not very bullish. Well, we've got another email query. This one is coming in on Neel Kamal from Banumati in Chennai. He's bought about 40 shares of Neel Kamal at a price point of about 1815. Now the outlook for the long as well as the short term is awaited. Does it make sense to stay invested or not? Well, we don't really discuss the stock fairly often, but let's understand, Siddharth, how you're looking at this. Do you believe that, you know, it can manage to hold out in the long haul? How are you looking at the long-term prospects? Because unfortunately, the stock is trading at about 1600 rupees. Banumati here is losing out 6000 rupees. Do you believe it makes sense to wait it out, or there's much better opportunity in this market?
I would suggest the viewer to wait it out with a target of around 2300. The basic fundamentals is quite strong. It's a consumption company. It's plastic furnitures, PVC furnitures, and because of GST, organized segments like Neel Kamal has been really gaining that traction. Of course, new products are also there in the markets which they are approaching towards online platform. And the latest one is quite evident. Crude prices have come down, so it will definitely impact, and when crude prices goes up, they pass on the prices. So there is not much of an impact. So because of lower crude oil prices, there is a traction today seen in Neel Kamal. I think keep holding. It's a consumption play. For next 6 months, it will really do good. Hold on with a target of 2300.
Okay, that's Neel Kamal for you. Mrs. Sedani saying that you should hold on to this one. And of course, do remember, there would also be perhaps that added benefit, though of course an indirect play, because crude derivative prices as well could see a reaction due to the downtick seen in crude. But of course, that is if there is a continued downfall in crude. So maybe not an immediate reaction, but yeah, if there is a sustained fall in crude prices, then Neel Kamal may stand to benefit. Manas, over to you then. You as well are recommending a hold?
See, between 2014 and 2017, we saw a big rally in Neel Kamal from the level of 200 to almost 2200. Now, on the short-term charts, I don't see any trend because stock is moving very much sideways. But one thing is very clear, that stock has a lot of support near to 1500, because in last 3-4 months time, many times it took support over there. So keep the stop loss below 1500, hold the stock. However, the trend will turn bullish only if it sustains above 1800, 1850 mark. So if it breaks that, then definitely you can see a rally towards 2200 or maybe 2300 in Neel Kamals. So hold is the call, but keep the strict stop loss below 1500.
Okay, there you have it. Watch out for Neel Kamal. That's the outlook. Keep a stop loss below 1500, and even Siddharth believes that it's a compelling hold in your portfolio. Well, before we proceed any further, just want to remind our viewers that I'm sure you have lots of questions and queries regarding individual stocks in your portfolio. Well, you can simply reach out to us and connect with us with your questions. This is the one-stop shop for all your queries on buy now, sell now. You can email us on bnsn@etnow.tv. Simply follow us on Twitter on the handle @AskBNSN. You can also dial in to 022-6754-9000 or connect with us on Invol #BNSN Stock Queries.
Okay, well, those were, of course, all the questions and queries we received. But you, of course, if you have any, you do rather want to invest in equity markets but don't know where to start off from, well, we've got wealth creation ideas and multi-bagger ideas as well that we present every day on Buy Now, Sell Now. This time, of course, it's coming in from Mr. Sedani. So, Mr. Sedani, what do you have for our viewers?
Well, Mobina, first would be the consumption play, that is Voltas, a Tata Group company. One should buy with a target of 680. It's a leader in the room air conditioner market, more than 20% market share. Overall, if you talk about in terms of ACs are concerned, inverter AC market share is around 40% on the overall AC sales. In the air cooler space also, they have been really doing good. They sold around 2 lakh units with a 38% growth. This company has done a new JV with a company called Beko. It's an international company for launching newer product lines in the consumer market, that is refrigerators, microwaves, washing machines, and so Voltas being a Tata Group company, a quality blue chip company, one can of course buy. Healthy order book has been seen in the other part of the business in Voltas, that is engineering business, where around 5,000 crore, a little more than 5,000 crore is the order book, and this space has also been doing and contributing good time into the business. So Voltas being a consumption play, one can always buy a Tata Group company, a quality blue chip with a target of 680. The second company would be IndusInd Bank. Now the recent acquisition of Bharat Financial will play out really very good in coming quarters in terms of synergies are concerned. This current quarter we've seen the results being coming out and management expecting retail and corporate book to be 50-50. Overall, loan growth in the Q1 FY19 was around 29% on a blended basis. If I talk about corporate, was 30% and 28% was retail. So loan growth expectations from now on would be around 26%. NIMS has been really doing good. Little tepidness has been seen. It was more of a flat in nature, little less than 4%. We believe stable asset quality and strong NIMS will bring in a lot of growth for IndusInd Bank going forward. Results were fairly intact. One can buy IndusInd Bank with a target of 2248. The third wealth creation idea which I would like to recommend to our viewers would be from the mid-cap IT space. Mid-cap is on the run. That would be Persistent System with a target of 960. Well, this company into digital space and last 2 years has seen good growth in the digital space. $175 million is there in the balance sheet, cash. With this cash, the company is planning for inorganic growth acquisitions in US markets, and 2-3 main triggers which are there for Persistent is, of course, they have increased their on-site and off-site pricing by 2.5 to 4.5%, and rupee depreciation would be a good tailwind for the company. Buy Persistent System with a target of 960.
Persistent Systems, IndusInd Bank and Voltas. Long-term wealth creation ideas. I hope our viewers have taken note of that. Thank you, Siddharth, as well as Manas, for joining in today on Buy Now, Sell Now.